Gensol Engineering shares tank after the market regulator SEBI has passed an interim order against the firm and its promoters over alleged fund diversion and false disclosures as well. To discuss more on this, we are now joined by Shriram Subramanian, who's the founder and MD of InGovern. We're also joined by Vaibhav Kakkar, who's the senior partner, Saraf Partners. Thanks a lot, gentlemen, for joining in. We read through the SEBI note, and there have been some glaring misappropriation allegations out there as well. And beyond that as well, if you just look at the way the stock price has moved from over 1,100 rupees down to where it is right now, a near 80-85% decline from the top, there's been a serious amount of wealth destruction as well. Shriram, I wanted your thoughts on what went wrong here, because one of the glaring mistakes that the SEBI points out is that they went to the plant and it appeared that there was no production that was taking place. In an era where there is so much, research that is undertaken by a lot of the research firms, etc., along with all the investment bankers as well, who would look at all of this. Do you think this did not pass their due diligence? What exactly happened here?
It's a matter of timing. I would think from a perspective of investigation, etc., I don't think any analyst of such a small cap is going and visiting the plant, etc. Today, of course, the market cap has been pumped up by social media and influencers. And explicitly, this is a case of blatant fraud and forgery. And SEBI, in fact, doesn't touch upon this entire topic that you aver to, which is pumping and dumping the stock, where social media influencers are used and explicitly hired by the company to put out order book status, to put out manufacturing numbers which are out of the blue, to put out data and numbers and sort of influencers pumping up the stock and talking up the stock. And to the extent that the market cap is totally unsubstantiated, there are no numbers to back it. And eventually the promoter is selling the stock. And based on that, either the promoter is leveraging by pledging the stock or selling it themselves, which shows in the SEBI order that they have bought and sold the Gensol shares.
Right. Completely take that point. Let's also bring Vaibhav into this particular discussion. Vaibhav, where does the blame lie? Number one, of course, you have seen that the promoters, it's now quite clear that there has been significant wrongdoings on that front. We've also seen multiple quarterly updates come in where there's also been auditors who've audited the financials. And it's quite surprising that there haven't been any clear red flags that have been raised. Does that also concern you? And are you also worried, or are you slightly surprised that it has taken SEBI so much time to go ahead and come out with a detailed report as far as the forensic audit is concerned?
First of all, good afternoon. Thank you for having me on the show. Well, you're absolutely right. Invariably, if you look at instances of the past as well of fraudulent transactions undertaken by promoters to benefit them of large listed companies, whether it is the case of CG Power, whether it was the case of United Spirits, whether it was the case of Satyam, or for that matter, Fortis Healthcare, invariably you would see that it is not just the promoters who have participated in that fraudulent transactions. There are a bunch of stakeholders as required by law that are meant to put systemic checks and balances, namely the auditor, the independent directors, the internal audit requirements, and various disclosures that they're required to make from time to time. It appears that in this particular case as well, a number of questionable circuitous transactions were undertaken. Also, basis the SEBI order, it appears that it was actually the credit rating agencies. So for once, kudos to them to have called it out very clearly. It is the credit rating agencies that brought it to the attention of the market when they felt that even some of the reports with regard to repayment of debt were falsified by the company. And so clearly it points to the fact that, and some of the other practices where manufacturing was not taking place, monies were moved to benefit the promoter to buy expensive real estate for their own benefit, money being circuitously used to purchase its own shares, clear case of alleged fraudulent unfair trade practice and insider trading, as well as complete ill practices insofar as falsification of accounts as well as financial statements is concerned. I think all of this systemically points out to the fact that obviously the promoters have not done what they were supposed to do. But besides that, the key managerial personnel, which is namely the chief financial officer, the auditors, all of their roles would need to be thoroughly assessed and investigated. And one hopes that by the time SEBI completes the forensic audit, there's greater clarity on where all and who all have been the players who have partaked in this sort of scheme, and then they're eventually brought to the book. But I do also want to make one very quick point, and maybe I think that could be a segue to another question that you may have, which is that what happens to the company? SEBI, in its exercise of powers under the SEBI Act, has issued certain directions which has barred them from being on the board of this company, dealing in securities of the company as well as dealing in securities in the capital market. But what happens to the company? And I think effective revival plans, the independent directors would need to step up to revive the company, because there's clear bad faith right now, which is also punishing the investors and the public shareholders who may have stocks in the company.
Which exactly was, one of the questions that we had for InGovern. How do you protect shareholders from this, and what happens to the minority shareholders who have lost nearly 80-85% from the top?
SEBI has the powers, I would think, to supersede the board, whether it be the current independent directors or new set of directors who can come in and step in and take the company forward. After all, one would like to think that because we see the blue smart cars on the road, at least there is some physical assets. Two is the EPC business itself. There is some merit to the EPC business, hopefully. And so whatever it is, there is some operating business. There are some employees that has to be safeguarded and ring-fenced from all these. And obviously the lenders, which is the IRDA and PFC, are going to sort of have their claim to whatever extent they can recover, because they may have already sold some of the shares which are pledged, etc. There is, I would think, more than 1,200 or 1,600 crores of debt on the corporate book itself. So to that extent, it's not a small number, given that the market cap is now less than 400 crores and headed southward.
Vaibhav, that's a very interesting point that Shriram has just put out. There are a few operational assets, as you can see. There are cars running on the road. Now, when it comes to retrieval of number one, you have the lenders. Number two, you have the equity shareholders, and in the pecking order, the equity shareholders actually are at the last. So, does an equity shareholder, number one, have any recourse to legal action in this particular case? Number two, what is it that the lenders can hope to retrieve? And number three, you've actually seen a case where there has been purchase of a property in the promoter's own name. So will those assets also be attached, and can there be some recovery on that front?
Very valid question. Let me answer it in this way. The law books have sufficient number of provisions that empower the shareholders to take legal action. In fact, to my mind, this is a fit case for a class action under the Indian company law. I happen to be championing the cause of a shareholder in a large listed company, which is Jindal Polyfilm, in initiating the first class action in India. I would imagine that similar such framework may come into play in times to come. Under the class action framework, the promoters and the directors of the company who are responsible and liable for fraudulent transactions can be made personally liable to compensate the company and its shareholders. So to my mind, apart from whatever punitive action that SEBI might take from a regulatory standpoint, shareholders, equity shareholders, would also have the ability to initiate direct proceedings to be able to recover for the loss. Of course, it's easier said than done. The legal processes in tribunals and in courts can sometimes take a little longer than one would expect. But I do also want to make one quick point. See, the challenge would be that, promoters' holding has now come down to 35%. And almost entire part of their shareholding seems to be pledged with banks and financial institutions. Typically, with the SEBI order of the nature that it has been issued yesterday, one would imagine that lenders will now very quickly call out events of default under their financing documents. And the promoters holding in no time can actually come down to a very suboptimal percentage, close to 1%. Something similar had happened with Singh brothers when they lost control of Fortis Healthcare as well. If you would remember, when the banks sold the shares, the pledged shares in the market, and promoters holding went down to less than 1%. In a scenario like that, as Mr. Subramanian was mentioning, I think it's absolutely critical that SEBI collaborates with the government to come up with some sort of a mechanism to revive the company, getting in institutional shareholders. Because if you will let this company go down the IBC path, by the time there'll be recovery, you can actually have a Jet Airways where there's no.
We take that point. We take that point entirely. Thank you so much, gentlemen, for joining in and giving us your insights out here. Is the start of a conversation. Obviously, the ultimate goal is improvement of shareholders and preventing them from any such fraudulent activities that may take place in the near future as well. Shriram as well as Vaibhav, thank you so much for joining in on for this conversation on our channel. With that, we have run out of time on this edition of Midcap Radar. 2 indices in the green, 2 indices in the red. Atop your screen, Vivek and I take your leave.